Last week, we saw the Ghana Ministry of Finance come up with its 2022 budget. Now, amongst the many things we can get into on that particular release, I want to draw your attention to a few things. First and foremost, we saw that the fiscal deficit relative to GDP for 2022 is going to print at 7.4% relative to 9.4% in 2021. Now, how are the authorities envisioning this? Well, firstly, on the revenue side, they expect a whopping 44% increase in revenue over the course of 2022, which is, of course, quite eye-watering when it comes to the number. Now, how are they going to achieve this? Number one, well, they're going to be enacting a few tax reforms. First and foremost, they're going to be implementing a 1.75% e-tax or electronic tax on all transactions that have been going through into the economy. Now, this, of course, is slated to actually increase the revenue base, or the tax base, rather, within Ghana, because about 7.5% of all Ghanaians pay tax, which, of course, is a comparatively low number when it comes to the regional average. Part of that, of course, is going to be raising revenue through domestic initiatives. They're going to be increasing how they're going to be collecting revenue from individuals. They're going to be, of course, relying on the economic growth that we expect to see in 2022, which they're slated at over 5.5%. Now, on the expenditure side, a lot can be said, but I think the eye-catching number there is that interest and compensation to employees is going to gobble up all of the 23% increase in expenditure that they're expecting next year. So in all of this, how did the financial markets react? Well, they didn't quite like that. If we look at the Ghanaian Eurobonds overnight, after the budget was released, they widened by over 100 basis points, which in the context of emerging market bonds was actually quite a huge move, making Ghana the underperformer of the day. Now, why are external creditors or investors into Ghanaian bonds taking such a bearish view on this particular budget? Well, the hint is in the number that I mentioned earlier, which is the 44% increase in revenue. Investors simply aren't buying that. I think there are way too many risks globally that may actually result in that revenue underperformance, hence leading to that fiscal deficit coming in much wider than expected. So over the course of 2022, what are the key things that you should be looking out for to see whether these targets are going to be met? Well, number one, I think we should keep a good eye on the PMI index, which is a survey that gives us a real-time feel of how the manufacturing sector, as well as the services sector, is thinking about the prospects of the economy. That gives us a very good indication in terms of whether the economy is going to be growing at the rate at which the authorities actually expect it to do. Secondly, we should be looking at vaccination rates within Ghana. This, of course, is a very, very good thing in terms of understanding when the economy is going to be going back to pre-pandemic levels if everyone is inoculated. And then lastly, we should keep a good eye on the use of technology to broaden the tax base, which, of course, the authorities are relying on to actually ensure that they get the revenue numbers that they're expecting.